Well, guess what? It is Fed Day, the day that we've all been waiting for. So, my name is Dan Frio. I do the rate update every day because my true goal is to inform and educate you guys on real estate. I'm not trying to explain to you guys when to buy and where to buy and how to buy. My goal is once you decide, what are all your financial options? Did you know you can get away with, in some categories, 0% down? Do you know if you need 3% down for a lot of first-time home buyer programs, there's down payment assistance programs out there for you guys to assist you with that? Did you know that there's a student loan program out there that we're working actually with the founders of that company to help you guys drive down your student loan payments so you can qualify for more of a house if you want to? So there's a ton of things that we can offer you guys if you're in the market for looking to buy a house in 2023. But in today's video, what we want to talk about is what the Federal Reserve is going to do today. Because if you've been on the sidelines, or you've been focusing in on real estate for the last year or so, you've seen rates go from basically 3% to almost 7.5%, and even 8% in some categories. So we want to focus in on the housing affordability. We can't really control the prices, or I don't know really what's going to go on with prices. That's the facts, but I can give you a little bit of a clear crystal ball say into what's going on with mortgage rates. So without further ado, let's get over to the news for today. So I'm going to show you guys the screen that I use. Here's the screen that I use on a daily basis. I don't share this with you guys because it's just confusing as all get out. Let me explain to you what I'm seeing on my charts here. You can go through here and it gives me all economic data and news down through the bottom sections here. But if you look along the top, you can kind of see me scrolling there. You see the 10-year Treasury. And then you see the MBS 5.0 and the MBS 5.5. Let me explain this to you real quick. And why a lot of times I say, well, I want to focus in on the price of a mortgage-backed security. So all this will tie in together. If you look on your screen to on right here, you're going to see the 10-year Treasury. And a lot of people, talk about the 10-year Treasury on, financial channels. And then they also say, well, if you watch the 10-year Treasury, you're going to see what happens with mortgage rates. It kind of has a correlation, but it's not a direct correlation. What we focus in on was what's happening to the MBS market, the mortgage-backed securities market that is a bond that trades on Wall Street that's yield is basically the biggest component of your mortgage rate. So the confusing part is if you look on your screen, you're going to see the 10-year Treasury, and it says 3.494. Okay, that gives us the yield. What the yield is on the Treasury. Okay, so then if you go over to the 30-year UMBS, the MBS bond that trades on Wall Street, you're going to see 99.91. That's the price. Why do they do that? Because it's confusing. So that's why I always say to you guys, when we're looking at the MBS market, we're looking at the price, so it has an inverse relationship. Do you see where the MBS market, when it skyrocketed right through here yesterday, and then there was a counteractive or a flip-flop effect on the treasuries right down here. So the MBS is spiked way up and the treasury spiked way down. So you can see one is price, one is yield. Okay, so hopefully you understand that. But today's basically news is what the heck the Federal Reserve is going to do. So the expectations, I'll give you mine and basically what Wall Street's expecting. We're expecting rates to go up 0.5%. Now, it doesn't mean mortgage rates are going to go up 0.5%. Basically what it means is the federal funds rate is actually going to go up 0.5%. What in the world is the federal funds rate? Well, the federal funds rate is how, if a bank, let me explain it this way. This is the easiest way to explain it. At the end of the day, you know how if you have a checking account and you're overdrawn, you go to use your overdraft. Hopefully you have one. If you don't, make sure you call your bank and get overdraft protection. So if you're overdrafted at the end of the day, you can get overdraft protection with your bank. Well, wonder if a bank who needs to have excess amount in reserves every night before they close doesn't have enough money. Well, they have to go to another bank or they have to go to the Fed and borrow money overnight. Okay, that rate is the federal funds rate. That is it. So it's not what credit card rates are. It's not, any other rate. That is the exact rate. However, that rate usually correlates with a lot of the other rates, especially short term, like personal loans, car loans, maybe adjustable rate mortgages that are tied to the shorter term maturities. The 30-year fixed rate and everything else goes to the MBS market. So if you're way confused, let me just get to the point. We're going to watch the Federal Reserve today to see what they do to interest rates, because as they act, other interest rates actually go in accordance with it, but not tick by tick. So if they increase rates 0.5%, doesn't mean mortgage rates are going to go up 0.5%. What we've seen so far is mortgage rates have actually dropped over 1 full percent in the last 2 or 3 months, and I'm going to show you that here shortly. But let's go over what the economic news is for today. Basically, all we're looking at right now is oil inventories, in the Federal Reserve meeting. Yesterday, we had the inflation number. And this thing, I don't know if you guys watched the market yesterday, but if you go back to this chart, look at this chart. The mortgage-backed securities market spiked. Okay, you're seeing right here in this cell. And then they gave back half of it. You saw probably if you didn't watch the stock market was up over 900 points yesterday, and I think it ended up flat. So we had a nice little rebound, but then all of a sudden everything started coming back. Does somebody know about something that the Federal Reserve might be doing today, or are people just positioning for what, the worst maybe? Okay, so let's get over to Market Watch. The news that we have today is really nothing. So what's the market doing? The Dow Jones is up 148. Everything else is basically just flat. You're going to see this really flatten out right before the Federal Reserve announces what they're going to do. We're going to be watching that live today, so hopefully you join me so I can explain it to you as the news comes out. But let's get over to what effects this is all having on the mortgage-backed securities market. We know yesterday we had a huge rally. We gave half of it back, and now we're giving a little bit more back. But again, this number is going to be hugely volatile going right up until what the Federal Reserve announces they're going to do. So this number right now, I'll consider this is basically flat because we're teetering up and down all day long. So I'm really not concerned about this right now. Mortgage rates, where are they? Well, let's just look at this. This is Mortgage News Daily. They post this every day, and I just use it because it's really simple. Look at it. This is top 6 products people use when they're purchasing or refinancing a home. There it is. So what I wanted to explain to you guys is, look at the rate over here on the 30-year fixed rate now. It's 6.28. Okay, so we know the Federal Reserve has raised rates 5 times this year. Yeah, 5 times, and they're going to do it one more time. Okay, but let's look at where the 52-week high is on mortgage rates. You can see it right in this area here. It's 7.375. Okay, where are we right now? 6.25. So we're over 1 1/8% lower in rates than where we were just 2-3 months ago. So if you locked in or you closed at a 7+ rate, please call me. We can probably get you out there, and most loans do not have a prepayment penalty. But if you're in the process right now of getting a mortgage, or you're looking to get pre-approved, or you want to just kick the can around saying, hey, I got a lot of student loan debt. Can you guys help me because it's burying me and I'm never going to be able to buy a house? To help you. If you have credit scores, you're like, I don't know if I qualify. Do you know a 580 credit score will get you into a house? Okay, so all these things are probably things you don't know. So what we ask you to do is just reach out to us. My name is Dan Frio. I do this every day, and I have a team of loan officers behind me. And what we do is we consult with you guys, because you're out there. If you're looking to buy your first house or maybe your first investment property, it's confusing and stressful, and you can get really ripped off. So what we offer to you guys is we are a federally chartered bank, but we also are a huge brokerage, meaning we can actually broker out your loan to over 85 of the country's largest lenders. So if you want to check us out, at least reach out to us to say, hey, can you guys help me get into a house in 2023? We'd love to help. So go to therateupdate.com. This is what you're going to find. You're going to be able to give us a call. That number's right over here. You can schedule a meeting, apply online. Please, I ask people, don't apply online. Let's talk first so we can explain or answer any of the questions that you guys have before you apply, to make sure we get you into the right program and we know your scenario. But also, if you're out there and you already got a loan estimate, you're locked in a rate, you got pre-approved, and you're like, hey, Dan, how do I shop this thing around? Well, I got a solution for you. Right over my head, right there, you're going to see a loan estimate tab. If you've already got pre-approved or you locked in your rate, all I need you to do is let us check it to make sure there's not a better rate or lower fees out there. What do is you click the loan estimate button, it'll pop that up, fill out the information right there, drag and drop your loan estimate or loan estimates in here, and we'll analyze those to, like I said, over 85 of the country's largest banks, lenders, and mortgage companies, and get back with you and say either, great job, you did your shopping and you did a great job, or we can save you on a rate. We can save you on fees. We can actually save you on both of those. And that's what happens in most cases. So check it out. But don't forget, we will be live today when the Federal Reserve meeting happens. And then I'll also have a live event for first-time home buyers later this evening, me and Kyle, to answer all your questions live that you have that, how do you get into a house in 2023? That's what we'll answer. So thanks for watching, guys. God bless, and I'll see you later. Bye-bye.